How are we doing? Let's where are we? TV. All right, 1 second, guys. How are we doing? Hey Simon, how you doing, buddy? Sorry, I was just typing. Can't see you, just screen. Okay, why is that? There we go. So I literally just got in. So uh, I'm I'm not going to be placing anything else today, guys. Literally, I've had 3 attempts selling this bloody gold here. Uh, Now, obviously, I'm doing something a little bit with trade management at the minute, and I should have really taken some profit here because we did get 20 pips up. Um, but I just hit a break even, then it came back. I took the same trade again, got another break even, and then took the break of the 30-minute low here, then killed it as it broke the high. So I had two break evens back to back, and then one small loss. So I'm kind of if you look at the 30-minute structure, I was just looking at trading into all this free range down here. So I'm kind of done on the markets today per se for what I'm going to look at. Obviously, we've got FOMC tonight, so I'm just doing a live stream just so we can have a look at the market in case any of you guys are looking at trading. But yeah, I'm I'm not actually going to be doing anything today. I've um, what's the best way of saying it? I've closed the shop today. It's not been it's not been an excellent day by any means. We've had, like I say, just in there two two break evens and one loss. Through here, had a winning trade as the 30-minute. We had this candle that closed just below the range, a wick up. I sold the lows, took some profit into here, and then it reversed and stopped me out for the remainder of the position. So yeah, I think gold's just not really been fantastic. I think right now, if I was going to look for anything, I don't like these wicks here, so I'd happily trade short from here if we got the setup. Obviously not now, but I would do based on the fact we got clean range to trade down. Um, I think the hourly would be the right call to look at for sells if you're going to trade this. You've had price reject resistance level. You've had an inside seller candle. We're creating a top wick now. So if it was to break the hourly candle low, if you look at what we've got in terms of range, we've got 130 pip range for the market to fall into. Um, for the buys, 92. For the buys, I think I would just wait for, if you're going to look for longs, I think above 3,400. Potential buys above 3,400. Oh, that says 2,400, 3,400.7. Um, Here I'm going to put H1 sells below bearish candle. So that's what it looked like. So, but you're talking initial stop's going to be something like that. So what's that? About 85 pip stop. Bit of a the trader. Hey, the trader, is that Terry? I always get mixed up with people's names. If it is, how you doing, buddy? You well? So yeah, H1 looks potentially okay. Um, Simon, I'm not sure if you've seen it. Regarding the upgrade, Simon, I said it's not something that I normally do, but obviously because of what you're doing, I would consider the upgrade for you, mate, and just deduct what you've paid for this year, less the 3 and a bit months that you've been on board, if that makes sense. NASDAQ is breaking. Yeah, so I'm definitely going to steer clear of indexes for now. Um, in fact, I'm steering clear of everything because we're going to see some volatility. Like, people are going to make money here, they're going to lose money. Right now, it's the best time. I think this morning was the opportunities. Uh, Unfortunately, it didn't materialize. Didn't get any proper runners. So yeah, we had a couple of decent trades, but nothing really to shout home about. Uh, Momentum entries you could look for if you get an hourly break above the bullish candle here. We could see this as a little pause, but I would wait. I'd wait for a close above. You don't want to get caught in anything right now. So I think sells underneath the hourly low look good. Now you've created a top wick. And if we are going to get above here, wait for a close above for buys. So close above on the 30 could pave the way for a good one. It's around 80 pips. So if you get a close above, what's that? 33.93. Close above there, you got about 70 pip range up until the next structure level. So if we were to then look at the systems that we can put in place, would it be break? What type of trade would it be? Yeah, exactly. Um, so if we were to be going here, what system would we be trading? So you've got two potential trades that we could trade. The sell, what type of trade would it be? And the buy, what type of trade would it be? So you've got the setups here. So the buy would be a breakout, yeah, and the sell, yeah, I wouldn't determine the sell as a false break because we haven't had a close above the range. If you look at this, we've had a range formed, so I'd look at it as a range trade. Yeah, false break range trader. Yeah, exactly. So if you look, you've got support down here, resistance here, support down here, resistance here. So it's tapping the same area twice. So you've got those 4 points. When those 4 points are marked off, that's your range being formed. Um, okay, so on looking at oh, sorry, 1 second. 1 second, guys. So I just, um, yeah, so I'm not big. There's nothing really. If I had to select one trade here, it'd be short underneath the bearish candle. If I was to look for longs, it'd be above 3,400 be my preference. I wouldn't want to get caught in this little range here. It's not ideal looking at. And then if you drop down to the 30, got a wick here, a few wicks. We've seen the market spin in that area. We've got 15-minute resistance at the 33.95. So yeah, I would skip on this area as a no trade range. I'd just look at this as a an area to potentially sell from and buys if we get a close above here. Lower time frame, 15-minute. You can see we've created a support here. So if we see a 15-minute reversal and close below there, instead of just taking the hourly sells, you could wait for the 15-minute close below. Now, if the hourly does trigger this bearish candle, what type of candle's being formed? If we get triggered, yeah, outside. It'd be an outside candle if we get triggered underneath the low of the bearish candle. So now we've broken the highs. If the market was to reverse within this next 45 minutes, then this candle would have formed an outside candle. And in theory, that'd be a lovely, lovely setup if that happens, because what we've seen is a big shift in sentiment from buyers to sellers. Plus, it's tested the level and it's broke the high of that big momentum candle. So we do have potential for sells. I'll be looking for sells under 33, 83.65 if I was placing a trade this afternoon. But as I told you, there'll be no further trades for me today. Yeah, I've had my call it the baseball scenario, my strikes and out. I'm done. Um, as I was saying to the guys that were in here early, been messing a little bit with trade management, and I shorted these two candles here, so underneath the lows. Um, this one moved, we got about 20 odd pips. I just moved my stops to break even, and I was trying to let it run because I thought we could at least see 78, 75 somewhere in this region. And guess what? Got 20 odd pips, came back, stopped me out. Setup still valid. We'd had this bearish candle close below the lows. So what did I do? I waited for the market to come back up, and then as it came back down, took out the closing price. I sold again. We got about 20 pips up. Guess what happened? Came back to bloody entry price. Stopped out for a few small pips. Nothing significant. And then I traded the 30. Break of the low. Got seven. Didn't quite get 7 pips because it didn't activate my break even trigger. So it was 7 pips up, but by the time you deduct spread, it didn't get there. So my break even didn't activate, and we took a small loss on that one as well. So yeah, I'm kind of I've tried 3 times at the same zone, so I'm not going to try again. I've given it every opportunity. Um, this is where I let you guys take a punt at it underneath the hourly low, and you watch it, it'll sink. I, I can I can see it now. Where's it gone? Uh, is but I can't see it. Um, right, what else are we going to look at? The DAX. Let's get drawings off. There's I know what's missing. Bit of music. Always need a bit of music. Um, in fact, let's just go back to gold 1 second. I want to just quiz everyone. Right, if we were to look at gold, how many of you would want to sell? Or just put sell or buy. What's your preference? Do you want to buy or do you want to sell? What are we thinking, guys? Are you buyers or sellers? What's your preference? Going to be quiet. I don't know. My guts are selling gold. Maybe I'm forcing fundamentals in my head a little bit. I mean, look, forget fundamentals. Um, what we need to do is look at what the chart is showing and stick to rules, right? Because look, let's say you want to trade a range trade. So we go, right, what would the range trade look like? What do we need? So if we just come over here, let's see if I got breakout BBC. No, okay, so I don't have it. So look, range trade short. So the setup. What's the first thing we need? What's the first thing we need? Okay, so if we're looking for a range trade short, what's the first thing? Price of resistance. Okay, so we need uh, resistance formed. Yep. Next. So what's the next thing we want to look for? We're looking for a range trade. Think about the systems. Think about the process. Now we've got resistance. What do we need to see happen at resistance? Okay, so sell a candle to form. Yep. Next. So we've got a seller candle. What do we need to see next? Um, no, so we've got resistance formed, then we've got a seller candle to form. So obviously, because it's a resistance, we want a seller candle. So we'll just put seller candle to form. And that obviously is meaning it's below resistance. So you got resistance, then you got a seller candle. What's the next thing we want to see? Uh, Go on, guys. So a close below resistance wouldn't work because it could be a bullet. That could be a bullish candle. Okay, uh, so next candle to wick up. Step 4. So look, if this is our range, resistance is formed. We've got a seller candle. The next candle's created a wick up. Before we place the trade, what else do we need to see? Clear space. Next step. Matadora. Let's have a look at that comment. Yes, Lola. I know what you meant, Anna. So sell stop below bearish candle low plus spread. Okay, there you go. Done. So now, if we were to look at that, do we see a setup there? Do we see a setup there? Now, guys, I have to leave spot on the dot about 1:55 today. Okay, we have a setup. Is there anything else we could do to add confirmation to what we're looking for? So let's say we wanted to place a sell stop underneath here. Let's just make this one green. Is there anything else we could do to look for confirmation? Um, right. What else could we do, guys? Check the lower time frames. Okay, what we're going to check the lower time frames for. Bit of a clue there on the screen. So the difference between the buy and the sell price. So if you just put a sell order underneath the low here at whatever that low price is, if you didn't add the spread to it, as soon as price got there, you're just going to get triggered. It could come like 2 pips light of that and you'll get triggered. So depending what your spread is with gold. So what things can we look for here? Mm, what are we seeing here? Just think what you're seeing there, and this should add to your confirmation. And this is where I'm gonna scream. So you got 2 minutes left for this candle. Okay, so Vic, how you doing? So look at what's happening here, and tell me what you think you could add to confirmation. What what can we look for, guys? Come on, this is you should be seeing this straight away. There we go. What's happened? What can you see? Should stand, should jump out at you. Great time for it to freeze. Okay, so now we're looking at this and it could be a breakout short. So then we go, hold on a second. Our rules were right for a range trade. What about if we look at a breakout short? So let's have a look. We go, right. Do we have a close below support? Yes. Do we have clear space to the left? Well, clear space to the left. Let's have a look. We'd have to put a sell stop underneath the lows. So for the sake of 67 and so you basically got like 10 pips between that wick, that wick, that wick, and that wick. I'd be looking at still using the H1 low, but the 15-minute has now told us we've closed below that support. We'd wait for a wick up anyway. We do have plenty of clear candle space. So then all we're waiting for is the candle to wick up. Fantastic. So now we don't need to use the H1 as a stop. We can use the M15 providing it starts to turn. If it turns, we're just going to go sells underneath here, stop loss above the highs. So it looks something like this. So if that's it now, that's what we're looking for. Obviously, the stop will move higher depending where this bullish candle. So you keep moving this in line with the bullish candle. Does that make sense? So what we've done is we've overlaid a higher time frame range trade with a lower time frame breakout short. And if they both match up, then fantastic. Does that make sense, guys? Yeah, perfect. Okay, now obviously this whole setup will be nil and void if the market just breaks higher. So this is why we don't have to worry about emotions and doing things. We just literally do as it says. Yeah. So there's no emotions. It's just we work like a robot. That's it. Okay, so there's nothing really. NASDAQ, what's happening with the NASDAQ? I would leave all of these. The only thing that I think has any potential is gold, but you've got to remember that today's a bit of an odd day with FOMC. I'm going to give it 12 minutes, guys, and if there's nothing here in 12 minutes, I mean, you know that I'm not I'm not trading anyway today, but what I will be doing is guiding you through the process that you can take, which is how we could look at a range trade with a breakout on a lower time frame. You could place the orders underneath these wick lows here. Now, obviously, if you placing your stops, this is why initially, whenever it comes to placing orders, I'd always say place your order, initial order, above the point of structure where you'd cancel the order. And then, should the market trigger, then as it triggers, you just bring your stop to above the high of the candle of the trigger candle. Okay, so hopefully that makes sense. But it's looking pretty good. If this one just breaks these lows, I feel like we're gonna drop to 33.74 at least. Uh, there's gonna be nothing to do until we see. Um, all right, nothing really going on, guys. Give me something that you're looking at and share some charts. I think tomorrow could be interesting. Remember, what's the biggest mover of today? What's going to move the market the most today? Is it the FOMC or is it the press conference after? I think if anything today, what we'll see is we'll see indexes sell off in the lead up to the FOMC, and then depending what is said by Jerome Powell in the press conference, that's where you're going to start to see the movement. So I think basically what you can look for is any corrective moves uh, in the lead up to the FOMC, and then we could expect to maybe either see the market absolutely tank if it's negative remarks, or if we're talking rate cuts and etc., then I think I expect to see the market really start moving higher and very, very quickly. Okay, not a lot going on, guys. Not a lot. I still think the only trade you could potentially look for today or during this live stream is the sells that we've discussed underneath this low. And as I've said, it's not one I'll be taking because I've tried 3 times to short it from here and finished up with a net loss. So yeah, 2 break-even trades or 2 with very small profits and 1 loss. So yeah, it's that's my 3 strikes and out. If it drops, it drops. Just one of those days. In fact, to be fair, I was just saying to one of my members, was it this morning? Was it yesterday afternoon? I It's been probably the worst start to the month I've had in a year or so. Yeah, so not a happy start to the month of May. April was absolutely banging. Um, March was pretty good. Feb was good, but May's been a bit shabby to tell you the truth. But we'll get there. You have to have the bad times to appreciate the good, right? You also you also need let's say moments where not where you question yourself, but where you have to review what you're doing. So obviously my accountability and where I'm totally transparent is trading live in front of you guys all every day. But like everyone, we all will have periods where you're going to be having periods that adjust. You think everything you touch is going to turn to gold, forgive the pun. And then you have times where everything you touch you think just seems to turn to shit. So right now, you just have to believe in your process, believe in the systems, and then just check everything that you're doing. Right, did I do this? Did I do that? If you did, then you just keep doing it. But every time you go through a little bit of a down period, just watch your risk. The main thing you can do in anything is just watch your risk until you get your mojo back. Because ultimately, with trading being visual and a mechanical thing, there'll be times that you see something that maybe you're just seeing it because the state of mind, the frame of mind that you're in, which is why I think it's very important if you are new to this that you actually do create, the trade that you're looking at. Right, okay, what are the rules? What do I need to see? Okay, here's my checklist. Do I have this, this, and this? Yes, okay, fantastic. Now I can place the trade. Whereas I know a lot of people don't have checklists. They literally just look at a chart and go, right, sure, how do you do your risk? Do you maintain or vary depending on probability? Um, so always fixed. I never change it. The only time I'll change my risk is either dependent on the volatility in the market. So recently my risk is reduced because the candles are bigger. So therefore your stops are bigger and therefore naturally your risk is going to be bigger. I'll also reduce my risk if I'm having a bad period. Because if you're having a bad period, there's no point just keep trading at the same lot size and taking bigger losses. Just reduce it. Reduce it for 10 trades. If you win at least 7 of those trades, then you're back to your sort of like normal statistics, 70% success rate. Then you can go back to what you were or increase it midway between what you reduced it to. If you have another 70% success rate, go back to normal risk. Um, do I increase risk? Yeah. So if I'm having a fantastic month and I really want to ramp things up, I will happily increase the risk, but I'll always do it on a Friday. So, and it'll be proportionate to the amount of capital that's been made that week. So in theory, I'm playing with house money. So if I've made profit, let's say I've made profit of 5 grand for round numbers or 10 grand. And let's say my normal risk is 1,500 or $2,000 a trade. On the Friday, I might say, right, well, I'm happy to lose. I'm happy to be up by 5 grand at the end of the week. So I'm happy to risk 5 grand of the profit. So instead of risking 2 grand, I'm going to do 2.5 times my normal risk. And if I'm right, then obviously the amount of capital that I was up for the week maximizes and grows exponentially. So that'd be the kind of ways that I'd look at utilizing risk. So when you're performing well, then look to increase it, but based on performance. And when you're not performing well, uh, decrease it based on results. So pretty simple stuff, really, guys. Things that you would probably think, oh my God, why don't I think of that? But it's natural, right? It's just like going to a gym. You don't go and pick up a big heavy weight first time you go in there. You go in, you pick up the weight that you can manage and you can lift comfortably for a number of times. And then you go back next time, guess what? It becomes a bit easier. And then you go back again, it becomes a bit easier. And you go, the next time you go back, go, do you know what? I'm going to try something a bit heavier. And then a few weeks goes by, that becomes easy, you go up again. So this is in fitness, you'd call that like progressive overload, where you're loading the weights progressively, putting more strain on your body. Whereas in trading, it is progressive overload where you're increasing risk, but it's more for the psychology of it as opposed to anything else. Because the only way that you're going to start misfiring is when you look at the P&L and you go, I've gone from risking 50 quid a trade now to 100 quid a trade, and then you're going at 200 quid a trade, and then you 500 quid a trade. All of a sudden, the zeros and the P&L that you're seeing fluctuating can start to impact the way that you make decisions, as opposed to being a mechanical decision where you go, right, I'm closing X off at 10 pips, or I'm moving to break even at 12 pips. You then start looking and go, oh, I'm 500 quid up now after 6 pips. Right, I'm gonna move my stops. That's not what you did when you were getting the results. So why are you doing it now? You're doing it now because you can see the profit and loss. So get rid of the P&L numbers. The problem, yeah. Okay, any questions, guys? Because like I said, today I have to go because I've got an appointment that I need to get into Central for at 3 o'clock. So I just need to grab a quick shower from the gym. Um, but this is the setup we've been watching. It's a range trade on the hourly. Bearish candle at resistance. We've wicked up, waiting for the market to break the lows. When you look at it on the 15-minute, you've got support being formed. We had a close below support. This candle wicked up. Yes, it came back in the range, but it's an inside candle. So if we break those lows, expect to see the market move lower. Have we got any new people in the live stream today? If Let me know if you've got any new people in the live stream today, because I'm going to go in 2 minutes. But before I go, there's a couple of things you guys, if you are new, you don't want to miss out on. So the first one is, anyone new here today? Anyone new? Or we all? No, no one's new. It's all my members. Watch gold bloody drop now. Like I said, no. So no one's new. If no one's new, then I'm gonna make tracks, and I'll see everyone tomorrow morning. Yeah. All right, guys. Well, listen. Good luck. Stay disciplined. Don't do anything crazy through FOMC. You're better off watching on the sidelines and come back tomorrow when loads of crap has been cleared, because the markets will move, and hopefully we'll see some strong moves in a direction. Cheers, Simon. Cheers, Peter. Take care, everyone. So we'll see you tomorrow, guys. Bye bye.